Well, I appreciate the chance to speak with you. Um, we'll talk about some major issues that are affecting the markets. Of course, the big issue uh, with, and particularly in regard to the corn market and feed grains, has to do with recent crop damage that happened in Iowa. We'll talk about that. There is this long-term issue to be thoughtful of with regard to the grains that has to do with the flooding that's happened already in parts of China, and really the risk with another rainy month coming on of some of their major water holding bodies being structurally unsound, in particular the Three Gorges Dam. So that's sort of the in the tail of the distribution of what could happen. And we have ongoing issues with the U.S. economies, sparked, of course, initially by the COVID-19 related shutdowns has affected the ethanol industry and all of that. So we'll talk about that. That'll be interspersed with a discussion of corn and grain sorghum outlook. We'll talk about wheat, we'll finish up with soybeans, and also take your questions and discussion. So I think to gain perspective, it's good to look at where we closed at yesterday. And even since then, looking at the markets this morning, beans were up 16, 18 cents, corn up another 6, wheat up somewhat. So the markets say something, particularly when you look at the levels and the carries and such. So look at the corn market. It's, that we have $3 for D's corn at $3.34 on yesterday's close is indicative of a market that has expectations for a large crop. So these are the closes that came out at the end of the day after the USDA report. We'll look at the specifics on that, but that's a price that's tying in a 15 billion to 15.3 size corn crop in it, even with the uncertainty of the Iowa happenings that occurred and some acreage issues. So you have, but you do see some carry in those markets again from SEP to D's, 4 cents. So that's pretty close to full carry of what we acknowledge anyway in the corn market. Heading on out, we're still at 3.5 to 3 3/4, something like that. Well, 2/3 to 3 3/4 to March, May, July, September starts to ease off. D's next year sitting at 365 3/4. So again, not knowing where acreage is going to be, et cetera, the uncertainty that has to be dealt with, we're sitting at basically 366. And that's not $4. That's not $5. It's indicative of a market that doesn't see or isn't worried about supply shortfalls at all, or we wouldn't be seeing 365 out into the future or 333 right up front for this coming D's contract. For soybeans, again, you've got other things to play, but in general, November at 893, very little carry from August to September, really very little carry in that market as you go on out into the future. This market is the soybean markets are affected by the back and forth between the U.S. and South America. So by the time we'd start to be worried about supplies, gosh, here comes the South American crop late January, February, and March. So that it's a level crop with not much carry, a level market without much carry isn't a surprise. The hard red winter wheat market, I see a 418 1/4 up somewhat, no change to D's. No change on yesterday's market, but about 3.5 cent carries, et cetera. 429, 439, 446, some carry approaching half to near closer to full carry out into those future months. July next year, 456. So again, we're 418 coming out of the July contract that just went off for the September contract now. Next year, uncertainties all to be dealt with, what we plant, how it survives. We're sitting at 456. So again, these are markets that aren't completely in the doldrums. They're not down at loan rates, but they're just so-so. And given the supply demand uncertainties we've had, that's probably where we're at. There are some things that can come in and affect these, and we'll talk about them. But so far, as far as the futures go, we're not seeing great excitement. We're just kind of sitting here, treading water. It is interesting to look at some of the cash and futures price relationships. Of course, it's too late to be worried about planting any corn or soybeans right now, and that even came up in discussions about what happened in Iowa in the last few days. But the ratios between corn and beans, interesting. Upfront market about 2.8, about 2.7. So in terms of corn versus beans on old crop, favoring beans right now in terms of a leaning. We'll see where that is by the time we get to November. When we start looking at Nov versus D's next year. And we do have for hard red winter wheat down in I've got need to update that date. It should be 8/13. That's what I found this morning, basically on the Garden City Co-op site. 388 wheat down there in Garden, 331 corn. So we're not feeding with that type of ratio. We shouldn't be feeding, probably not going to be feeding a lot of wheat. We have the grain sorghum price at 346 over 331. So that's indicative of the strong export demand I think we see for sorghum heading off to China compared to where corn's at. Take a look at the corn and sorghum markets. We have questions about corn and soybeans. It'd be corn and sorghum's production prospects. Planted and harvested acreage, actually for both, are in question. That'll come into play as we talk about where the market could go the rest of the year and how it will have to deal with some a little higher than expected prevented plantings. So that's a question to be dealt with. We won't have an answer to that until as we head off later into the year with more FSA data. Crop yields, we were steady as we go to record high yields with just a few dry spots in Iowa, Indiana, Ohio. Generally good conditions, but then Monday, Tuesday, this windstorm, they call it Derecho windstorm, damaged parts of Iowa. Came in August 10th, 11th, Monday, Tuesday. Estimates of at least 100 to 300 million bushels. Estimates more recent than this say at 400 million bushels. Still, by the time a person does the math, you look at about 13.5 million acres of corn to be harvested in Iowa. And if the state estimates of 43% damage came in, and for 400 million bushels of loss, you'd have to have a 68 bushel per acre loss on that. And they were expecting 200 bushel per acre average for the state. So when this came out, some of our in contact with a number of people around the state via social media, they said, well, we've seen this in the past when our corn's blown down at something like this. Well, there's a lot of skepticism about just how much of that will be lost. Well, this is Kansas as opposed to Iowa, and the pictures that you see are that corn's lying flat. Will it come back? How will it be affected? I think we need to bring in our agronomist friends to answer that. But 400 million bushels on what they have, that's again about 60, 70 bushels per acre. You get to 100 by my figures, if to get to 100 bushels per acre lost, you're getting closer to 500 million bushels, 500 million. And you're starting to knock down those supply demand numbers. So here was some of the things we saw on social media. Again, trying to figure out, well, what is a Derecho? I think we've had a number of Derechos in Kansas in my lifetime. I just didn't know what they called it. Just straight line winds that came through and very, very damaging. Again, the front end of a storm front, and just have extreme conditions. And you can see that Radio Iowa talking about the 10 million acre damage, 43% of the crop being affected. You can see with the pictures, you see that lighter spot there, and climatologists, people used to dealing with these damage, with interpreting these types of maps, came in and showed where the areas of damage were, and some pictures of what it looks like. So blown over for sure. pretty thick stuff. Going to be, I would think it would be a late wet harvest at a minimum. So we'll have questions about the size and quality of that crop for a good long time. In the midst of all that, looking at D's corn futures, we've been pretty pessimistic. You see that we've moved down to the lower side about mid-April, have jumped up and down from that, but got down to about 320 and until these last run up the last day or so, again, this is for D's, we're sitting at 327, 330, something like that. So not gangbusters. It is noteworthy back in January that we had a top of about 405. So all optimism, pretty well gone in terms of low supplies anyway, bringing about higher prices. It is interesting to look at our cash prices. What do we see as an impact of COVID-19 on the markets? A lot of this having to do with ethanol taking a direct hit right off the bat when we closed down the economy. You can see how we dropped off from March to April and have been pretty pessimistic, with the piling on effect of a large crop since then. And even with all that, the futures are low, but we've had some surprisingly good basis levels in parts of the state. You can see the Garden City Co-op basis off our Ag Manager site. Record high at least since 2016 of basis. Positive basis here of late. Interesting when you look at Salina, central part of the state. Pretty good basis, not near as strong, relatively speaking, as for Garden City. Of course, Garden City setting. If you're in Garden City, you've got ethanol plants, one close and one or two others in the area, two close, some others in the area, livestock feeding, all of that happening, and you probably expect with the new crop coming on that would weaken, but at least here in the short run, we've got some strength. Might note for grain sorghum, what's the impact of the strong export demand for grain sorghum on the grain markets? Well, we've seen it in basis in Kansas, that's for sure. And when you look at the Garden City basis, they're 15, 20 cents over thereabouts, probably about 15 last numbers we had on Ag Manager. Some weakening actually in the more export-oriented area. Salina, I'd classify that as more of an export-oriented demand for grain sorghum. There's ethanol plants around there too, but still some weakening, but still a positive basis. You can see those trends. These are the numbers that came out for the supply-demand balance sheet, and I don't want to get us lost in all the detail, but when I saw that 15.278 billion bushel crop, and right coming out right on the heels of the Iowa crop damage, I thought, well, you know what? That 278 is probably about what we lost in Iowa. And if we get 400 million, then we're down to 14.9. If we get more, we're down to 14.8. And, all of that comes in, affects the bottom line. And, Glenn's livestock talk is so important to what's happening in the feed grains, anticipation of strong feed residual use, ethanol demand projected to hold up decently, exports, note the USDA probably, I would guess, having to do somewhat with what's happened in China and some other countries around the nation. That's pretty hefty jump from one year to the next, basically 1.8 billion bushels up to 2.25. And if China does have ongoing problems and logistical issues in their country and you name it, is that high enough? So even with all that though, record high ending stocks, 2.7 billion, and the USDA saw fit, and who can doubt if these numbers really work out that the price is pretty weak, about 310. There's from the same WASDE report, there's grain sorghum supply demand balance sheet. You can see basically what I see there is feed residual. But first thing you see is exports jumping 260 million bushels at the expense of feed usage, at the expense pretty much of ethanol usage. So when we got a demand pull in the grain sorghum market for exports, we go there and we, it's not that we don't use any sorghum for these other uses, but Well, you saw the prices in Garden City, the higher prices, a lot of that's export driven. And if corn's cheaper, accomplishes pretty much the same thing for feeding and for ethanol, well, we'll use the corn for those. And equal price with corn. Just to show you this, would show just quickly for ethanol production, we've come back probably up to about, well, again, you can see the weekly stocks numbers had been really high, had fallen off some. Production on that lower line up back to about 90% where we were. So that's better than we were in April. So I'm sure they're happy to see that, but the better the U.S. economy does, or transportation, the closer this number gets back to where we were prior to the COVID-19 impacts. Just to show you on exports, what I see there on that chart is that we started low through about the middle part of the year, and since then have been on pace, from about week 31 on to have pretty decent exports, a decent pace of exports for corn. But the slow start got us behind on it. On world corn production, just more for you to see here, U.S., the predominant player in the world for corn. But note, and these Argentina, Brazil numbers, they're to be harvested out in the late January, February, March, April, May of 2021. So the only market that has lots of extra corn right now, well, not the only market, but the primary market that has a lot of extra corn would be the United States. Again, some's coming out of Brazil, no doubt, but be interesting to see how this plays out, particularly if China comes in and ends up and has any problems. So that China number looks to be in doubt to me, given all their problems. World corn supply demand stocks to use. Just note that the ongoing total usage increasing about 3.8% per year for total corn usage in the world. Production not topping, but a little slower growth. So that's positive in the longer run, in the intermediate run for the corn market. Now, again, we're saying that the USDA just projected 310 corn, but still, note that ending stocks worldwide, even with China having a good chunk of those, has been declining. So interesting to see what the corn market is doing. I did want to put together some scenarios to try to think through what the impact of, on the one hand, X number of millions of bushels, hundreds of millions of bushels of less corn from Iowa, and X numbers of hundreds of millions of bushels of increased exports, mainly from China. And so I've got these scenarios. I think you have them. You can look through them. But KSU scenarios 2 and 3 basically are coming in and assuming, based on data just released yesterday from the Farm Service Agency and acknowledged amongst the ag econ grain marketing folks, that we probably that those acres we thought that weren't planted in the June 30th report, the 2 million acres, maybe they didn't get planted. It looks that way. So scaling down the USDA's planted numbers from 92 basically to 90.775, and for scenarios 2 and 3, and plugging in again that basically the Iowa yield loss from 181.8 down to 178.5, and you look out there to scenarios 4 and 5, maybe it's more. So by the time you do that, and look at the impact on the bottom lines, again, running through this, and for scenarios 5 and 3, adding in China, a jump up in exports, you're getting at, instead of 310, something closer to 365, 370. If we get, that's with 178.5 bushels per acre, basically 14.8 billion bushels, 14.5, 385, $4. So, the thing, well, when you go on to the next chart, so you kind of see see in 70% chance, really, unless we really get a lot more losses, that USDA is projecting about 310. So here, trying to factor in those losses and probably some more imports for 368. And guess what? That's basically back to where we were in 2018, 2019. So wheat markets, let's take a look at that. My good friend Louise Emke is on here, and she said she wanted to know what my answer was, what I thought on the wheat markets. I told her that's a good question. Let's go and address this. World wheat production, there's ups and downs out there. Lower production in the U.S. and the EU. There have been issues and questions about what Russia will have in terms of wheat production. The USDA numbers don't show it so much, but the market talks about it quite a bit. But still, overall, large, let me rephrase that, record large world wheat supply-demand balances. The challenge is on that to come in and adjust for what China has and then see where you stand. Lower U.S. dollar supports U.S. wheat exports, and I think we've been seeing that some. Generally good conditions. It was still, I meant to say the impact of China flooding other countries' wheat crop, uncertainty, still unknown. Generally good conditions. That should be dry in Iowa, looking more to the northern states. Looking out there at DEES, hard red winter wheat futures, we had spent a good amount of time dancing down towards 450 until basically as we got to harvest. After harvest came, we were kind of up and down, et cetera, and have trended down recently now at about 420 or hitting at 429. So with that, not a lot of optimism in the wheat market. Our prices, interesting to see, even with the futures being lower, our cash prices in Kansas since November have we've retained pretty much a seasonal trend. If anything, here in April or May, have done a little bit better than that. So here you got the futures falling off, the cash prices in Kansas doing at least a seasonal trend that we've seen since 1999, 2000. Basis levels, interesting. Look at basis. So with all that we wonder about and the world wheat market in terms of export movement, et cetera, we're looking at basis levels that are near as good as we've seen since 2016, both out in western Kansas, Garden City kind of used as a bellwether location, and then Salina as well. So basis, not terrible. U.S. wheat numbers, again, production lower. The USDA did come in, add 10 million, added 25 million, they were at 950 million for this year in light of what we've had for the recent pace for exports, moved that up 25 million, dropped the ending stocks. That's supportive. We're down closer now to 44-45% stocks to use for wheat. When we were higher for wheat, we'd get down to 35, 30, something like that. And that's about as low as we'd go for wheat. Again, wheat, given its closeness to being turned into flour, et cetera, we've been loath to get much below that. So we're at 44, tightening up a little bit. Average market price, 450. Here's the all wheat trend for U.S. wheat exports. You stack that up against everything since 2016. We're keeping pace pretty well with as strong as we've been. For hard red, we're more than keeping pace. We're basically at it. So where's wheat going? Great question. There were numbers that came out this morning, not too dissimilar. I add another point on this, but pretty strong wheat trends. Again, some weakness we mentioned in those other countries, the weakness of the U.S. dollar, a little weaker U.S. dollar, all helping. So it's for the good in terms of wheat movement. Just want to, here again, a little bit lower U.S. crop. Australia projected to recover. European Union lower, sharply lower. And China, 136 million. Again, that to me anything out of China right now is a placeholder number. I don't know that they know what they have. So China comes in, and even if China is short, when will we know it? Well, we'll know it when they start buying wheat at the ports. That's when we'll know it. So anyway, big challenges in interpreting that. And this really is a wild card. And note, they are China's second. Well, if this comes about, they'd be the #1 wheat producer in the world, and that number is in doubt. World wheat supply demand, you can see production trending higher, total use trending higher. In response, Louise, to the longer run part, a lot of places in the world grow wheat, and the general trend has been for production to be outpacing usage. So that's, and you really see it on the stocks numbers, climbing ending stocks, and the record high ending stocks. So that works against us in the wheat market for great price prospects. And for wheat, this is basically where things could go. In essence, taking the USDA numbers and thinking, well, if the spring wheat crop comes in, it had problems, etc., come into the lower side, we'd see production sacrifice some if we have higher exports on the other side. So basically, after all that, thinking about that, in essence, took 450, and if we have problems, then you go 470 to 490. But the odds on that are pretty difficult to. So I put 25% chance for either of those other two to happen. So 50% chance that the USDA is right, about 50% they're too low for a variety of reasons. Wheat ending stocks, you can see the numbers I have there, 470, 485, 490, thereabouts. And what I don't have addressed here on this is what will happen for wheat seedings this year. We have moisture in Kansas. We have so-so prices. To me, I just don't have a feel for where we'll go. We've had some confounding of signals coming from the government payments that have come in, and that's been talked about in our profession. By that MFP payments have taken the focus specifically off of prices, and if that's the case, and we have moisture, you'd probably think steady as we go to continue the trend to slightly lower. But I don't have any other great insight beyond that. Let's go to soybeans. World soybean demand, export prospects. Got to wonder what the China flood impact will be on soybean trade. We look over at the markets. Last time I looked before this started, up 16 cents. And some of that, again, perhaps some crop damage from the Iowa storms, but a lot of that just trade. Potential for China to be forced to be very aggressive buyers. Likely large 2020 U.S. crop. Prospects were looking good. Generally good conditions. Again, coming again, it was dry in Iowa, Indiana, Ohio, the central parts of the Central Eastern Corn Belt. Just in thinking, likely more crop damage to corn because of stock rollover than to beans, but it still presents an uncertainty. So I don't know, 100-mile-an-hour winds will beat up quite a bit, and I guess we'll see. Looking at beans, you can see where we were through most of last year. If we got down to 920 or 915, that was pretty low. Here during the COVID-19 crisis, got down as low as 830. Of late, with problems elsewhere in the world, lows about 865, highs 910. So you come up some off the lows. Our cash trend, gosh, you could take these trends for corn and for soybeans for Kansas cash prices and just superimpose them on one another. It's kind of a large systematic impact on those crops and their prices in Kansas. All that said, here you go again. Soybean bids in Garden City, the basis, it's not wonderful. It's probably 95 under, but it's the best we've seen in Garden City since and including 2016. You look at Salina, 50 under for soybean basis bid. The best we'd seen before was 75. So the exports, demand pull is having an impact. would say that, so there's that production number, a little bit in risk with the acreage and crop damage issues that we'd seen. The USDA came in, so they, no small thing, projected, estimated exports last year 1.65 billion, estimating 2.125 this year, and maybe that's low. So we got things happening on the export side. Couldn't come at a better time with the record crop. Ending stocks, 615 down some. It was 490, I think, the last, 400 some the last report. So they raised that up. That was bearish, and 835 is the price. Exports, for all we're talking about China, we've been just so. The export purchases that we've seen have been more along the lines. Well, they've been in the new crop marketing year, so that's where a lot of the buys have been. And production, U.S. projected to be higher. Again, Argentina, Brazil, that's all out into the 2021 year, at risk to production issues, whatever. So we'll see. And China does produce some beans. Again, that number is at risk. World supply demand estimates, this is a USDA table. You can see production to be up. And again, but that is almost irrelevant. It's projected to be up, but again, half of it more is 6-8 months away. So what we have now to look at is the U.S. numbers. And ending stocks projected to be where they are. Note, beginning stocks for Argentina and Brazil down appreciably. So that's something to watch. Imports for China projected at a record high. And if this production number of 17 million metric tons doesn't come in, that number is low too. And so world supply demand, with all that we've seen going on, the strongest growth trend out there is soybeans, up 5.2% per year. Production up 5.9%, but kind of leveling. Exports strong. Again, note, just as for corn, ending stocks in the world are tightening up a little bit. Want to finish up with this, U.S. soybeans supply demand estimates. So again, trying to deal with number one, lower acreage, probably because we got more preventive planting than we had anticipated, and some lower yields. So you look at those numbers, and USDA projected 835. By the time you account for some of these things, 855, 925, 935. So I'm probably being an overcautious ag economist and saying 45. If the USDA's outlook is probably 30% chance of being right, probably 45% chance more that they're a little bit low because of what we talked about. So 20 cents if you get major issues, stronger exports, and more crop damage than we anticipated, then we're up to 925, 935, and you can see that. So decidedly, if you need to plan on probably the 45%, but be aware that there's 25% chance, at least by my judgment, of prices being a lot higher. Okay. Alt H. Rich, I'd like to hit those chat things. I'm having a little bit of difficulty in getting the chat to show something.
Okay. We've got a couple questions. The recent explosion at the harbor in Beirut, Lebanon, is that factored into needs for wheat? UN World Food, it's estimated there that in 2 weeks there will be no more bread for people there.
I've certainly read about that, and a lot of humanitarian response, and we'll avoid judiciously what really, what was really going on there. But what happened was a catastrophe for Beirut, and so is it factored in? How many millions of bushels will it ultimately take? Is it 10? Is it 15 million? So there'll be a big response. We'll probably over respond, but even with that, it'll help tighten up supply demand balances. But I don't think by itself that you're going to move the needle on the wheat market a lot. Now, if you saw that, you saw this thing here. Well, let's get back to wheat. If we were sitting in a different situation where we weren't, where world ending stocks weren't so much, you see that 317 sitting there. We have enough extra wheat around that another 10 X numbers of million metric tons, it'll move things some. But if we were at 183 and this happened, then it's a market mover, because you'd be in a very, very inelastic situation. We're pretty elastic right now in terms of the supply demand curves. Good question.
And another one, barley. It's basic in India and other southern Asian countries. Is that a viable crop for Kansas land?
Is that a viable crop for Kansas land? I do not know, but I do know in my time out here since 1995, there have been people that have been involved in that. There was a breeder in the Quinter area. I'm not sure. I think in Lane County, I think they may grow some also. Is it viable? Well, they grew it. And what I would say about barley, and we talk about grain sorghum as with a crop size of 371 million bushels for this year. Barley in the U.S. is 176 million. The cash price for barley, $4.45, and so our issue here would be to grow it and then get it to the outlets where they need it. So that 310 versus 445, probably that difference is how much it would take us to truck it up to the Dakotas. Would be my thought anyway.
Folks, go ahead. We've still got some time here. Be glad to have questions.
And Rich, you'll have to read them to me.
I will. And go ahead and just type in which session you'd like. I'm just putting it back up for noon. You don't have to get on this, and we'll start at 12:30 after lunch if you do decide to do something else for that half hour. But if you'd like, we'd be glad to have you too. Here's one from John Holman. He's commenting on the barley. John is an agronomist out in southwest Kansas. Winter barley, successful research in western Kansas, not spring barley. The barley tested was feed barley, not malt barley. No information on malt barley, but probably won't work in Kansas.
Thank you, John. I would say that it will be good to know when the information is going to be coming into the market and what it is. The next USDA reports will be the September report, and I don't have the exact date, around the 10th, 12th, something like that. And that will be the first report where the USDA gets out in the field and actually does, objective yield measures. And so this year, when they went out into those fields on August 1st, around August 1st, all that corn in Iowa and elsewhere standing upright, looking great. So the timing probably is pretty good. This year they're going out in September. Be really interesting to see how they rate that. And I hope they give details, because does it look good but it's bent over? So again, find that people that have had experience with dealing with wind damaged crops like that in late season probably have some pretty strong opinions on just what they'll be able to see. And it is forecast that we'll have a couple weeks of dry weather coming up in the Corn Belt. That's part of what's given us strength today, I understand. And so how would dry weather work for or against a crop that's bent over like that? If you messed up the vascular tissues in the corn stalks and you stress it with dry weather, I'm not sure what you'll get. So we'll be watching what our agronomic colleagues over in Iowa tell us and what they're seeing on a point by point basis, because is it 300 million? Is it 500 million? Is it more than that? But basically you're knocking down, you're fiddling with the 15.3 billion U.S. corn number, and if it gets down to 14.5, 14.4, something like that, then you're getting below 2 billion carry out and starting to affect price.